I mean, look at the crash of 2007 and 2008, right? You have homes in Florida, right? I have a house in Florida. We have a home in Florida that, people were selling for 30, 40 cents on the dollar, right? Those same homes now are worth more than what they were pre-crash.
Right.
So it always comes back. It just might take some time. But that's the thing is, real estate is not a get-rich-quick thing. It's a long-term play. It's a wealth builder, right? And there's very true wealth builders out there like real estate.
Everybody, thank you so much. We're live, LCA, LabCoat family. Thank you so much for taking the time, as always, to be on another live webinar. I'm Greg Fowler, your host and moderator for today for LCA. I'm the founder of Lion Bolt Media as well, and host of Real Estate Titans. We got a really special one and a very special guest. And I'll preface this based off of the really bold line here, which I love, Matt, by the way,
Right?
From bankrupt to nine figures with real estate. And I can't wait to introduce. So Matt Simmons, he's the CEO of SIMM Capital Group. So it's a private equity real estate investment firm, 9-figure firm, 300 million in assets, 3,700 doors in 7 states across. I mean, I know that's not doing you justice, Matt, but I'm trying to give you that intro. So hopefully that was good.
It's the same intro I give to our investors when we speak to them on a daily basis. So you're doing great.
Love it, love it, love it. Well, Matt, I can't thank you enough for taking the time, sharing your love and knowledge with the LabCoat family and agents on this webinar. So thank you so much for doing this. Appreciate it.
I'm pumped to be here, guys. Thanks for having me on.
This is great. So Matt, obviously, myself, and I'm assuming everybody who's on here right now, whether you're live with us or after the fact, they're curious. What's the story? How did you get started? And, obviously an incredible process from bankrupt to 9 figures. And let's just go back. I would love to know more about you and your journey.
So for me, it goes all the way back to about 2006, 2007. It's kind of when my whole real estate journey started. I was a partner in another business with basically someone who I considered was my mentor, who I considered also my father. And we had built a business, we sold it. And I actually just took the profits that I had from that and started buying my own real estate, just single family. And my focus was Section 8, right? So I was in the affordable housing sector. And I just started building my own personal small portfolio on the side while I was building another business of mine. And that was actually a digital marketing and advertising agency based here in Pittsburgh. And so I ended up building that firm to about 25, 26 employees over the next few years, from about 2007 to 2010. And I was involved in a really bad accident in early 2011, mid 2011, where I ended up I broke my back. I broke my back in 3 places. I broke my pelvis in 2 places, compound fractured my leg, 6 ribs, horrible concussion, So I was laid up for a really long period of time. And I was in ICU for about a week. I was on bed rest for 3 months, meaning like I was propped in one position. I couldn't move for 3 months to allow my pelvis to heal up. Unfortunately, during that time, my advertising agency that I had owned, I couldn't go in, I couldn't operate. What I think I had set up well, I clearly didn't. And I ultimately ended up losing it. We went bankrupt. I went bankrupt there. That was my income. And so I literally had nothing left. My wife and I at the time, we had just moved into our brand new custom home that we had built. We had a daughter that was about to turn 2 years old that December. And there I was, broken in half, and basically bankrupt with no business and no income coming in. The only thing that saved my rear is the little bit of real estate that I had, because at least that was generating enough income for us to get rid of the house that we had just built, sold, move back into one of our other houses that we had initially bought for ourselves, that we had rented out and then moved back into. And at that point, that's all I had. Like I had, a few $1,000 coming in a month from the rentals that we had owned. And it was at that point time to rebuild. And so that's what I did. I brought in some friends, I brought in some family members. We started buying and acquiring more real estate together. and just kind of building that small little personal portfolio until about 2014, when the SEC changed all their regulations when it came to crowdfunding, right? That's when crowdfunding started getting big, 2014, 2015. I saw that as our opportunity to really kind of take what we were doing with the real estate to that next level. And so we did. We registered our first fund with the SEC. It was a small $5 million Reg D fund. And we had that fully committed within about 2 months. And from there to today, we've done just over $500 million in transactions as a whole. We just opened up our 5th fund, which is our very first institutional capital fund. So we're going after, large family wealth offices, pension funds, all the institutional capital stuff. It's a $100 million fund. And then we have our 4th fund, which is our retail investor fund, which is SIMM Cap Fund 4, which is a $50 million fund. And that's all geared towards retail investors with a minimum investment of $25,000. So, I was broke. Like, I had nothing, right? And it was really the real estate that helped us get through, but then was also the spark that was like, wait a minute, we can do this much bigger than we were up to that point.
Matt, again, I can't thank you enough for sharing that, and the detail in there. It just really puts everybody in that story and that scenario. And what a crazy ride. I want to take you back, I guess, to the point where everything was gone. And when I base that off of when you sold the beautiful custom home and you relied on the real estate, moving into that with a few thousand coming in, what were you thinking at that time, and what motivated you to get moving forward? Because most people, and reason why I ask is this is very pertinent to this shifting market. Obviously, this is towards residential real estate professionals that are tuning into this now live with us or after the fact. And any shift in the market, people get scared, they get nervous, they have all these false barriers that are inside themselves to stop from moving forward and having success. What you went through is massive, life-changing stuff. And you still persisted and you still succeeded. So what was the perspective? What's the takeaway there from that time in your life?
Don't get me wrong. There was plenty of days where I'm like, I'm done, I'm over, I'm down, like woe is me type of stuff. But, I'm very quick to snap out of that. It's just kind of how I'm programmed. And I'm one that always just like, it doesn't really matter what I'm hit with. Like, as a business owner, we are problem solvers, right? That's all we do every single day. We solve the problems that we're presented with. And to me, at that time, this is just another problem. I need to overcome that problem. How am I going to do that? Well, let's look at the tools I have in front of me, right? What are the tools that I have at my disposal right in front of me? And what was making me money at that time? It was real estate. So to me, it was a no-brainer. Why would I go off and try to do something else brand new? Why would I go get a job working for someone else when I haven't ever worked for someone else since I was like 19, right? And I'm 42 today, right? So I was like 31 and 32 at that time. And, it just, to me, it made sense, right? And now some people, I understand that they're not going to be able to kind of put those dots together and find that path that easily. But to me, it's just about looking at what you have in front of you, because there's always tools at everyone's disposal, no matter how bad something might be. Like, I didn't know how I was going to make. I had a daughter. She had just turned 2 by the time I was back up on my feet, right? I have a picture of her pushing me around in a wheelchair after I got out of ICU and off of bed rest, right? Like, so it didn't matter how bad I felt about me. I had a daughter and a wife to support at that time, and that was the most important thing. And so that's what kind of kept pushing me through, because if I didn't generate any income, if I didn't make something happen, they weren't going to eat. I didn't have a big savings. I didn't have anything. Like, I literally had the real estate that I owned and nothing else in the bank. That was it.
Wow.
So to me, it's like, it's kind of like when a dog's backed into a corner, right? It's that fight or flight type of thing, right?
Said, yeah.
I'm going to fight. That's just how I'm programmed. And I think more people, honestly, are programmed that way, and they don't even realize it until they find themselves in that position where they don't have another option.
Wow. And again, just inspiring everybody that's tuning into this. It's just that there's nothing that we can't overcome. And, no matter what you're feeling right now, somebody has it worse. Somebody's gone through it and they've really pushed it to the next step. But I mean, obviously through not lack of trying and not hard work, right? You put in the hours, you put in the time.
Yeah. You have to put in the work. I mean, you have to get up and do the work. It's not going to come to you and land in your lap, which I think a lot of people kind of expect nowadays.
Yeah.
I think we see that everywhere. And okay, so let's talk about this industry specifically when it comes to that, right? Agents have had it really easy the last 7 or 8 years as a whole together, right? We've been in an up market since 2000, late 2010, early 2011 for the most part, right? Is when we saw things really starting to rebound. It's now changing. The market's shifting. It's starting to correct. The economy, we're in a recession. I don't care what anyone says. We're in the beginning of a recession, right? And it's only going to continue to get worse. You're gonna have to get up and go do the work. Things aren't going to land in your lap anymore. You're not going to have 20 offers within 24 hours of you listing your home right now.
Right.
You know what I mean? And so, but that's what they got used to. And we even see it in the commercial space. We're trying to buy, $15, $20 million multifamily complexes. And it takes 3 weeks to get an agent to even call you back when you're sitting there ready to put an offer in, but you just need an answer to a question. So even those agents, because it was extremely competitive, they could sell at 3.5%, 4% compressed cap rates. You can't do that now with the cost of debt. With debt at 5 point, I just got off the phone with one of our lenders before I hopped on here with you guys. We're at 5.85 on a 25-year agency, Freddie Mac debt program. So you can't sell at those compressed cap rates anymore. So you got to get up and do the work.
Wow. I mean, Matt, the way that you describe that and break that down, it's so truthful. And I was just having a conversation before we jumped on this webinar with a fellow LabCoatAgent moderator, Long Doan. He's a phenomenal producer and just a true professional. And the exact conversation was based off of what we were saying is the market was not normal prior to today. Today, it's normal again. So you got to put the work in. You didn't have to work the same way as it is to right now. And the real and true professionals will shine and grind and really take a lion's share of the market share. Okay. And unfortunately, the people that are just riding the wave, they're going to get themselves out. And it's an unfortunate reality, but you don't have to be one of those casualties. Is what I'm basing it off of. You want it, go get it. You want it, do the work. I love what you're saying.
Yeah, you're absolutely right. Because look at this. There's opportunity in every market: up, down, up market, down market, neutral market. You have opportunity everywhere. It just, some markets take more work, right? Some markets require you to be a little bit more innovative. Some markets require you to just stand out a little bit more. Or some markets just require you to be freaking persistent and just do the work day in and day out until you get what you want, and then you double down and you go even harder. The problem I see so often is that people put this little bit of work in, they don't see results, and then they just throw their arms up in the air like, oh, it's not working. No, that's the problem. It will work. You just got to keep pushing through and put that work in and get over that initial hurdle, because on the backside of that initial hurdle or roadblock is where all the success lies.
Wow. I love this, Matt. And this is going down such a great tone. And I know that there's so many people out there that are listening to this that needed to hear it, myself included. I think it's crucially important. I want to go into a point that you brought up, which is kind of a saving grace to your story, is the aspect of your investments into real estate. Mm-hmm. And, obviously the tone in a lot of real estate professionals, and I don't know the accurate stat, you might know this, Matt, but most real estate professionals don't invest in real estate.
I was just going to say that. Yep.
And I think that ultimately you had the foresight to have real estate investments, having a digital marketing agency, right? And then going into the aspect of that being a saving grace. What would you say to the audience about investing in real estate? And I guess how does your company help with some of that or guide through some of that too? I mean, I love a connection to that.
Yeah. So let's go back to my story, right? And I'm gonna kind of compare and contrast a little bit, right? So the two things that I had was I had my active income job, right? So let's relate that to agents or real estate professionals, right? If you're an agent, you're out there selling real estate, working with your buyers, working with your sellers. That's your active income job, right? The real estate that I had bought and invested in, that's my passive income job, right? That money is coming into me every single month, and I'm not having to do anything for it because I own the real estate and we have tenants in there, right? So my active income job, I had two sources of income, right? The problem is like you stated, the majority of real estate professionals aren't actually invested into anything that's going to generate them passive income, which is why they get burnt out so much and are constantly going. We said this before we went on live, are constantly going from commission check to commission check to commission check or deal to deal to deal, is because they don't take some of their money and start investing it into something that's going to generate them income every single month, whether they close a deal or not. Right. And so even me today, yes, I have this capital group, but I also have my own investments in the real estate that if I left the office today, I went and spent a month at the beach, I'm still making money, even if I didn't take a pay from the company because of my own real estate investments that I have. Wow. Some of that's through the fund itself that I invest my own money in, and some of it is my personal holdings that I have before, that date all the way back to 2006 and 2007. So it's really, it's about understanding that you need multiple sources of income. And the best way to get that is having your active income job as well as your passive income. And there's nothing better for passive income than real estate. Wow. Right? If you look back at anyone that has significant wealth, right? Majority of that wealth or majority of their wealth moving forward, or a good portion of their assets or their net worth is in some sort of real estate holdings. Why is that? Well, because you can't pick it up and move it. You can't take it away, right? They're not going to build any more land, right? So the values, even though you're going to have the peaks and valleys long term, it always comes back, right? Sure. I mean, look at the crash of 2007 and 2008, right? You have homes in Florida, right? I have a house in Florida. We have a home in Florida that, people were selling for 30, 40 cents on the dollar, right? Yeah. Those same homes now are worth more than what they were pre-crash.
Right.
So it always comes back. It just might take some time. But that's the thing, is real estate is not a get-rich-quick thing. It's a long-term play. It's a wealth builder, right? And there's very true wealth builders out there like real estate.
Yeah, and the way that you broke that down for active and passive, I think that's a real powerful statement to look at it. And the long-term play into really just growing your wealth portfolio, I think, is crucially important. But I think it's just such an odd dynamic because real estate professionals eat, sleep, and breathe real estate. So you would think that that's just a natural path for that. So you have conversations with so many people, Matt. What would be your advice to the first steps? Because we know that most aren't doing it. And let's just not even pick on real estate professionals. Most professionals are not having passive income. It's all active. Right. So when you or your firm has conversations with people, what does that look like? I mean, how do you get involved, I guess?
So for us, and the way that we approach things is like, we're not here to sell anyone on anything. We're here to present opportunities. And if someone wants to take advantage of those opportunities for themselves, fantastic. We'll help you through it. The bottom line is that we give people the opportunity to invest in real estate without having to actually be hands-on doing it themselves. That's the biggest advantage of coming in and investing with someone like us. Someone can put $100,000 in with us. They're going to earn a 9% a year preferred return plus a 65% share of the profits. They're averaging year over year cash on cash between 17 and 18% returns, right? Wow. You can't get a 17 to 18% return anywhere else, right? And you get tax benefits too, because we're a fund, not a REIT. So all of our investors own a portion of the actual real estate, so they get the tax benefits and depreciation passed through as well. So there's multiple different, benefits to working with not even just us, but even another fund like us to start building your real estate investment portfolio, start building that passive income if you don't want to go out and do it yourself. Now, if you do want to go out and do it yourself, that's great. I encourage that too. If you have the experience, as a lot of real estate professionals do, start going out and doing it yourself. But here's my number one thing, and this is probably going to raise a lot of people's eyebrows. Right. Don't flip real estate. It's like the worst. To me, it's not even real estate investing because it's an active job, right? It's an additional active income job. And on top of that, you're taking the risk by trying to play the time with the market, right? Which I know a lot of flippers right now that are hurting because they bought before the market started correcting. They're mid renovations, They're going to have to refi out of that eventually at some point at a much higher rate, or they're not going to be able to sell that property for what they thought they could sell it for, pre-correction. You're just going to find yourself in a lot of hot water. And on top of that, you're going to kiss 40% of your profits goodbye to the tax man as soon as you sell that property, right? So to me, I hate flipping. I think it is the worst model ever when it comes to real estate for those reasons specifically. But remember when I said earlier, it's a long-term play, right?
Yeah.
If you want to do that type of work and that stuff piques your interest, fine, burr it out, right? Buy it, renovate it, rent it out, and then refinance it into a long-term hold. You pull some of your profits out, which by the way are tax-free because it's considered debt, but then you have passive income coming in from the rent every single month from your tenant on top of it. So it's the best of both worlds. So, if you want, that's to me is one of the best ways to start getting involved if you want to go do it yourself. I don't like recommending, we buy 100, 200, 300 unit properties, right?
Gotcha.
I don't recommend someone go out and buy a 50 unit property from the get-go if they haven't actually owned any other real estate as an investment. You're just getting yourself into a whole world of problems that you have no idea what you're getting into from the management side of things. Mm-hmm. Build up to that. Start with an 8 unit, 10 unit, 15 unit, 20 unit, whatever, and work your way up to it.
Great advice.
Those are kind of the different ways that I would recommend going about it, depending on which method you want to do and whether you want to be hands-on or not.
I appreciate the honesty and the integrity behind that, Matt, because you've been there, done that, bought the t-shirt, and you can see both sides of it. Yeah. And ultimately, the advice that I heard from you was just advice that I feel that you would be giving to yourself. The advice that you would be giving to your younger self, right?
100%, right? It's like if you could go back and tell yourself, tell your younger self anything, what would it be? And that would be 100% it. I mean, I tell it to everyone that I talk to that wants to start real estate investing because they see HGTV and they think flipping a home is like, like that overnight and it's so easy and they put $100,000 in their pocket and it's just not reality.
Yeah, no, I hear you. And there is something to be said to having trusted, experts that you're working with. And I think that ultimately, real estate professionals understand the importance of leveraging knowledge and hiring coaches and trainers and really bringing their business to the next level. So it's a direct correlation in my mind to bring your wealth to the next level and not necessarily trying to do it on your own. And that's always kind of how I bring those together and into a mindset for a real estate professional. So I mean, Matt, this is phenomenal advice and information all the way through and through. So where is it for the future with SIMM Capital, and where do you see the market going? I mean, I know you don't have a crystal ball. I'm sure people ask you this all the time, but
every day when we're talking with them, sure. And it's a great question because it's a lot of people are kind of wondering what's going to happen. I shouldn't say that. A lot of people are scared of what's going to happen, and I think if you look at the headlines, it only feeds into that fear mindset. Absolutely. I don't buy into the fear, right? I just don't, because like I said earlier, I think there's opportunity in every type of market. What do I see moving forward? Well, I see a few things. I do see. Well, let's look at the last couple of years, right? And let's kind of walk our way into this, right? So let's look at the last couple of years. Everyone's freaking out like, oh, prices are down 20% over last year, and I'm like, okay. But let's really look at this for what it is, right? I'm a data guy, right? I'm a numbers guy. So let's really look at it for what it is. The 2020 and 2021 were anomaly years, right? They were not the norm, right? Why is that? Well, for a couple of reasons. Interest rates were kept extremely low due to COVID and shutdowns and everything like that going on, right? Due to the pandemic. And that kept mortgage rates artificially low. They forced them down, right? Which what does that do? Well, it increases demand, right? If someone sees a really low rate, okay, well now they can afford more property. They're gonna start shopping, right?
Sure.
Then you take the fact that there was trillions of dollars that were pushed into the system in handouts for COVID, right? So now all of a sudden people have extremely low interest rates and they have more money in their pocket, which means affordability went up even more on top of the low interest rates. So that just drives demand even higher, but supply was so low due to the fact that people weren't going to sell because of the pandemic. They had no idea what was going to go on. They didn't want to uproot their family. They were in a state that was really shut down, whatever it was. So inventory was extremely low. So that's what drove those price points up so high between 2020 and 2021.
Wow, good point.
So what I tell people is you can't compare the market right now to 21. You can't compare it to 20 because those were anomaly years that are not any basis of comparison. So you have to go back to 2019 price points and numbers to really see where the market's at today and what trajectory we're on. Well, price points, what's the average year-over-year price appreciation nationwide? 3.5%, right? It's kind of the rule of thumb. Where are we at over 2019? We're still above that 3.5% year-over-year price appreciation. So if you really compare the data and the numbers that are out there for everyone to look at, stop taking the scare headlines and thinking the world's ending and really look at it for what it is. And we're not in a real estate crash, and we're not going to be because of the fact that people have so much equity. That's the saving grace. And that's the difference between now and like 2007 and 2008. People didn't have equity then, right? Sure. They were 100, 105% leverage to the hill on stated income, with a 575 credit score, right?
Yeah, insane.
We don't have that now. We don't have that debt crisis. We don't have those mortgage reset crisis, the ARM reset crisis coming up. We have trillions of dollars of equity that people have in their homes that they're not going to just say, okay, bank, take my house back. I'm walking away from it, like they did, because they can put it on the market and they can sell it, right? Now, let's look at the flip side of things, where demand is right now. Demand has slowed down, right? Why is that? Well, because interest rates are at 6%, 7%, right? For a 30-year fixed. So that drives demand down, that drives affordability down. But that also drives the inventory down, or keeps inventory low, because people don't want to sell their home at a 3% rate to go buy something at a 7% rate.
Well said. Well
right?
said.
So even though demand is coming down, supply is following suit. And so you still don't have that equilibrium point where then the supply will overtake the demand because of those reasons. So, and I don't personally, this is what I think, you don't have to take my word for it. Sure. I don't think that there's going to be enough supply that's going to hit the market to overtake the demand that's still out there to cause those prices to crash. We're still 2 million homes, 3 million homes short inventory wise in the country, and builders stopped building.
Yeah.
Right? Yeah. So there's a reason, there's multiple reasons if you really look at why the real estate market is not going to crash. It's correcting, and it needs to, right? It couldn't sustain what it was doing over the last few years. Well, even the last 10 years, right? It can't sustain that constant upward trajectory. So it's going to have to correct, but that's healthy. That's needed, right? And so, and again, demand's dropping due to inflation and all that. Obviously, affordability is falling through the floor. So, but again, that doesn't necessarily matter because inventory is not hitting the market, in droves like it did in 2007, 2008 to cause that crash. So that's moving forward. That's kind of what I see. I kind of see this correction. I see it starting to stabilize out within the next kind of, I would say 8 to 12 months, which also coincidentally is kind of where I see interest rates starting to stabilize. I see another, they're going to do another 50 to 75 bit hike at this, at the next meeting. I honestly think that's probably going to be the last big hike. Okay. And I think things will start to stabilize and start to come down a bit. But ultimately, within the next 24 months, I see the rates coming back down fairly significantly, which is how we're buying real estate, right? So we're taking down and we're buying real estate because of that thinking. And so what we're doing is we're taking a lot of our real estate down utilizing bridge debt that we can then go in, because everything we buy is going to be value add, right? So all of the multifamily that we buy, we buy it at value add so that we can raise rents to market average, increase occupancy, stabilize the property, increase the value of the property, increase the net operating income, so that then we can go in and refi out of that, pull out the additional equity that we added into that, return that money to our investors, and continue to operate that property. But we're taking it down with bridge debt because we're planning on what I just talked about happening, meaning interest rates are going to start stabilizing, they'll start coming down again, and they'll come down in what I think is about 2 years out, between 2 and 3 years out, which is about the time we're going to go in and refi our properties anyways and put them into a longer term, agency debt type of program. If we bought properties now on agency debt, we're locked in. We have a 5-year prepayment penalty that steps down, interest rate, or percentage penalty wise from 5, 4, 3, 2, 1. I don't want to lock ourselves into a long-term program and then have to refi in 2 years and pay that 2 or 3% penalty, which is why we're utilizing the bridge debt based off of what I think is going to happen with the industry. If that makes sense. I know I just threw a ton of info at you.
Matt, that was incredible. And again, I know we're just scratching the surface of your knowledge base and everything that way. I think that ultimately that's why it's so important to me is to work with professionals and individuals who know the market, know what's going on. And again, have the detail orientation to make proper investments and foresights into that, just as you discussed. And it's tough for an individual who hasn't done this or has dabbled in this to make these decisions, especially on a larger scale.
Sure.
Partnering in numbers, I think is great that way. And, you had mentioned a lot of incredible things inside there. I think ultimately, Matt, if you could kind of, break down just to kind of wrap everything up, is there anything that you'd want to share with the audience, maybe to encourage or, advise or, just give any piece of advice out to anybody who's tuning in, essentially for investment purposes?
Yeah. So right now, with the way that things are going, with the economy going the way that it is, it's contracting, with obviously the real estate market correcting and slowing down. Most people right now will start like really contracting, right? They'll start pulling back from doing anything, investing into anything, wanting to, put their money to work anywhere else. You need to be doing the exact opposite of that. Because right now there are going to be, and moving forward from here, there's going to be some of the best opportunities that are going to present themselves. And you shouldn't be scared to take advantage of them solely due to what the economy is doing or what the market as a whole is doing. So like for us right now, we're actually buying more aggressively and more heavily and closing on more properties now than we have in 2020, 2021, and part of 19 combined.
Wow.
Simply because of we know that this is our opportunity to kind of get our leg up on our competition and kind of get that extra step on them. And we're not scared. I mean, I'm not scared to buy at all, as long as we know we're buying right. You know what I mean? And so for us, a lot of that comes down to how we're underwriting the properties, how we're identifying the properties. And look, guys, here's the thing. You're going to look at tons of properties before you actually invest into one. I probably look at 100 for every one LOI we put in.
Wow.
Right? It's probably more like 150 for every one that we close on. So you're going to look and underwrite a ton of deals and a ton of properties before you find that one that is going to fit you and fits you numbers wise and they pencil out, especially right now, because people still want a premium out of their properties. They think it's still 18 months ago. And so it's just being patient, but pouncing on those opportunities when everyone else is not taking advantage of the opportunity that's in front of them.
Beautiful advice. I mean, I think that rings loud and true to so many entrepreneurs and professionals who really understand that mentality. Matt, and again, I can't thank you enough for just diving deep and granular into some details into here, because I know there's a lot of people tuning in that are nerding out and getting excited about it too. So I do want to put your site on here, because I think that's an important thing. SIMMinc.com, but that's for SIMM Capital. So I just put that in the chat for everybody. But Matt, what's the best way for somebody who's tuning into this either live now or after the fact to get a hold of you, to get a hold of your firm, to learn more, to get involved? What are the best ways?
So there's a couple different ways. One, you can find me on Instagram, which is just real Matt Simmons on Instagram. You can shoot me a direct message, follow me, shoot me a direct message. I always go through all my messages on a daily basis and try to respond to everyone, other than the spam stuff that always gets in there. But I'm happy to answer any questions. I'm happy to help guide you. I'm happy to hop on a call, happy to hop on a Zoom with you guys, with anyone that has any questions. You can go right to our website if you want to learn more about the actual group, the company itself, what our business model is, how you can get involved there, the types of properties we're buying, the types of investments you can make. You can also schedule with us directly through there to hop on a phone call. It does go to my investor relations team, but if you put a note in there, which you can, that you're coming from this interview or this podcast, then they will get you in touch with me directly. I'm happy to hop on a call with anyone. I'm happy to talk with you, answer any questions. Here's one thing I don't do, okay? And this is probably a surprise to a lot of people.
Yep.
I don't do coaching. I don't do mentorship programs, and I'm not going to charge you for an hour of my time.
Wow.
And here's why. I had amazing people that were involved in my life as I was going through the ups and downs of the story I was telling you earlier. Mm-hmm. And they didn't charge me for any of that. They didn't ask me to buy a program. They didn't ask me to buy their course. They didn't ask me to, I'm going to bill you, $500 for an hour of my time. They simply were there to help me. And so for me, I like giving that back, right? Now, there's also another reason, and I'm going to be 100% blunt and upfront.
Yeah.
I don't have the time to dedicate to building out a mentorship program or a course, or actually being involved with people on a one-on-one basis, on a weekly basis. And I'm not going to charge for something that I know I can't give my all.
Well said.
So like I said, I'm happy to hop on a call. I'm happy to hop on a Zoom, answer any questions anyone has, if they have any. But you will never get pitched any of that from me ever.
Matt,
there's enough of that out there.
You are a true professional through and through, my friend. Knowledgeable, credible, just a pleasure to speak with. And again, I know we just tapped and scratched the surface of what's going on. So I encourage everybody who's tuning into this to reach out to Matt and the team and really just get involved, learn more, do your due diligence, and really just look for that passive income, right? Looking to grow your wealth. Crucially important for that. So Matt, I can't thank you enough for taking the time, my friend. It's been a pleasure and an honor.
No, God, I had a blast, guys. I appreciate you having me on. I could talk about this stuff for hours. I love it. So
it shows, my friend. It shows. The passion and the heart are there for sure. But I can't thank you enough. And I also want to thank everybody tuning in, as always. LabCoatAgents family, you guys are the best. Hopefully you enjoyed this live webinar. If you're tuning in after the fact, and again, you can jump on YouTube and catch the full link if you just caught the tail end of this for the live. But thank you so much for your time, love, and attention. And we'll catch you on the next live webinar through LabCoatAgents. Take care.
yes.